Well, good evening and welcome to this live stream event on the 13th of September 2022. Martin North from Digital Finance Analytics here. Great to have you on tonight. And we're going to talk about property in and around Brisbane mostly, but there will be some very relevant conversations more broadly about property and what's going on as well. Just before I bring Meighan in, I will just remind you, of course, as normal, that we don't provide legal or financial or property advice. It's a general conversation only. Please play nice in the chat room, no racial slurs. This is as of the 13th of September. If you'd like to ask a question or get my attention, use @WalkTheWorld in the chat. That goes into my queue to make sure I can see it. I've also enabled Super Chat, which means that you can get your questions up on the list if you want, or indeed make a contribution to what we do around here. And with that out the way, Meighan, I'm going to bring you in. Hello.
Hello. How are you, Martin?
I'm pretty good. How are you going?
Fabulous. It's been a beautiful day up here today. It was 24 degrees. The sun was shining. Beautiful one day, perfect the next.
Oh dear, oh dear. It was 16 degrees here today. We had rain this morning and a cold wind, and it's blooming winter.
I'm so sorry.
But there you go.
I did get a little bit sunburnt on the weekend, to be honest.
Yeah, it is actually quite interesting, isn't it? Just how the weather moves around the place, and particularly at this time of year. Look, it's great to have you back on again, and
thank you for having me again.
So many things to talk about. It's interesting. One of our chats was about a year ago, right? What a lot has changed.
Almost a year to the day.
What a lot has changed in that time. So I guess let's do two things. One is give you a chance to introduce yourself, because I lose track of all the things that you get involved in, so it's easier if you do that. But then I want to sort of pick your brains a bit in terms of where you currently see the market and what's changed. So that would be a good place to start too. But anyway, just introduce yourself to those who may not know.
Thank you. And you do an awesome job of that, I have to say, on the introduction on the YouTube channel. But yeah, I've worked for a long time in property, over 22 years, and as founder of Property Pursuit, which is a specialist buyers agency in Brisbane. We sort of have that on the ground kind of feeling. So I'm not a data person. That's your job. You're awesome at that. My job is really about feet on the ground, understanding behaviour, understanding impacts of different things that are happening and what people are doing in response to that. So that's really what we do. We've helped over 780 people make really intelligent decisions about choosing the right home or investment property. And along with Veronica Morgan, you mentioned we founded Home Buyer Academy, which was really our passion project to help first home buyers get really well informed so that they can make really good decisions as well. And Veronica, of course, was a co-host of Location Australia. Her and I have a podcast called Your First Home Buyer Guide. So tune into that if you want to learn a little bit more about how to buy a house really well.
Yeah, I've pointed a number of people in that direction, and they found it really, really helpful, those guides, particularly for first-time buyers, particularly now, right?
We're straight shooters. We get straight to the point. There's no BS in there. It's just really what you need to know, what you need to ask, what you need to do, and I think that's really what has been missing for a long time in the industry. So we're pretty proud of that.
Exactly. Well, I think we're all battling the same issue, which is we want to help people to understand more about what goes on in and around property so that they can make better decisions. And that's about being informed, but also stripping away some of the veneer that actually gets in the way, and maybe some of the assumptions that people make about agents and the way agents work, all those things, right?
All those things come into it. Yeah. And how to interpret and how not to just look at the headlines and how to dig below. And, my interest is really around how people's behaviours impact on the property market and what we can learn from that. So that's sort of where I come from a lot of the time.
Yeah, absolutely. And look, just in terms of where we are at the moment, there is a lot of talk about the markets. I mean, this is the CoreLogic data from last week, right, which basically said, well, over the last quarter, values on average, and I don't like averages at the best of times, but on average is, Sydney's down 5.9% over the quarter, Melbourne 3.8%, Brisbane down 2.5%, Adelaide still above the waterline, as is Perth. But of course, a number of people have been saying the markets are, definitely fading. Now, you and I probably both have a similar view here to say that you really can't talk about the market, right? You've actually got to talk about...
Yes, we do. We do. Can we just really, really ram that home? Because there is no market. There's no Australian property market. There's no Sydney property market. There's no Melbourne property market. There's no Brisbane property market. That's just what rolled up statistics are used for sometimes to, kind of tell a story, and that story can be interpreted either way with the same statistic. So, we're both very passionate about the fact that you have to get much more granular than that to understand, particularly if you're going to be a buyer or a seller in a particular market, and let's call that market an individual suburb.
Yeah, and actually within an individual suburb, even a couple of properties in the same suburb, similar sort of model of properties, could be behaving differently if they're in different sides of the street. One's got a view, except, you got to
different property types.
Yeah.
And I guess that's a little bit of the theme, and thank you for the little segue there. That's a little bit of the theme of tonight, is that in terms of helping people to understand what's happening in the Brisbane property market, I've kind of broken it down into four major segments, if you like. And I'm going to go into that a little bit because it's important to understand that these segments are behaving really, really differently, and the buyers in those segments are behaving vastly differently, and that's having an impact on prices. Some are actually continuing to increase and others are going down. So I'm really quite excited to share that with everybody so that they can get a bit of an idea that it's not just, as you say, it's different properties in different streets and so forth. There's different quadrants or sectors within individual suburbs that are priced differently, and it's really that understanding of the granular level, the on the ground local knowledge that's so vitally important if you are going to be a buyer or seller in any of those markets.
Yeah, and you're preaching to the choir here insofar that I believe that very passionately too, and it's also very important that people understand the buying process and you do the right amount of due diligence through the process, which means you've got to get to know the area pretty well. You've got to understand the market dynamics in that area, because you can't read across from one suburb over there to another suburb over there and assume it's all behaving the same way, and therefore the price points are going to be the same.
Yeah, even neighbouring suburbs. I think the thing that has really alarmed, and I just came back from the Buyers Agents Association of Australia, REBA, it's called, the annual conference in Adelaide this year. So buyers agents from all around the country getting together and sharing their experiences and knowledge and so forth. And it's it's really, there is so much going on in so many different marketplaces, but the thing that was coming through so strongly was that for a period of time, and let's call it the FOMO period, I want to give it a name, the FOMO period, where people had such a huge fear of missing out, they weren't differentiating between properties. So they weren't looking at one that had, a northern aspect of the rear versus a southern aspect or a western aspect of the rear. They weren't looking at whether it was in a quiet, character-filled street or a main road. They weren't actually differentiating when they were competing for these properties. And we were seeing prices being paid for sub-grade, B-grade, C-grade properties that were what you would expect to see for an A-grade property, because people weren't differentiating. And I think it's vitally important that we understand that you have to differentiate if you have a long-term view of property, because the market isn't going to keep running for a long period of time. And right now we're seeing in a lot of areas that is the case. The brakes have gone on to some of these B and C grade properties and locations as well.
Yes, and it's interesting because I did a show the other day, and in the comments, there were quite a few Brisbane people saying, no, prices are still, plummetingly going through the roof in Brisbane. There's no sign of a slowdown, etc., etc.
And some are.
And that's the point. In some areas that might well
some
be the
are
case.
Not. and herein lies the challenge, right? Because if you are expecting that as a whole the market is still on a run, and you pick the wrong property to pay a premium price for, then you have overpaid for that. If you are still competing in a market where there is extreme pressure and low supply, and you have to pay a premium price for it, then that may be the appropriate price for it. But those two things might be operating at the same time, and you have to understand at a really granular level which one to push for and which one to hold back and say, oh no, maybe prices are coming off in this segment.
Yes, and part of the complication there is that when you chat to an agent, of course, they tend to always go for prices are bullish and you should, you don't necessarily get the complete story. And of course, any data in any of the portals is going to be delayed. That's another factor which people sometimes don't realise. Even the CoreLogic index is probably a month or two delayed. So you're looking in the rearview mirror rather than actually trying to understand what's going on now. And things move quite quickly.
They move quickly, and we certainly see that when we do indexing on pricing, when we're pricing individual properties, and we're looking at the indexation rate that we're going to apply for that to that, and that's something that we need to calculate ourselves. That can move really rapidly, but we're seeing 4 different markets operating really independently at the moment, and it's important to apply the right indexation to each of those markets. Otherwise, you can really overpay and put yourself at great risk. That's not to say you shouldn't be buying in any of those markets at the moment. You've just got to get the price right.
Exactly. And of course, that's the point, really. Price is determined on where things are, but also where you are, right? So those two things come together. And a lot of people say, well, you told people not to buy. No, I never said don't buy. I'm just saying make sure that you buy in a conscious way and you actually have the right information at your fingertips, so you know the right price point to engage in the market. Even in a down cycle, it's still quite feasible to buy, but you need to understand the implications of doing that, right? That's the whole point.
Yep. And you have to understand the risk of that particular decision at that point in time, because if you are buying in a market that is cycling down, there's no way of calling the bottom until the bottom has passed. So it doesn't matter how long. I know agents who have been in the market for 45 years and they still can only see some indicators as to when a market is changing. You really can't call it until after the fact has passed. So yeah, it's a hard one, but it can be done, but it has to be done with the right risk profile. If you're a first time buyer, you want to be really careful, but you can buy at the moment, and you can buy with reliable, independent and well informed guidance. Just be careful where the guidance comes from.
Yes, that's the point, isn't it? It should come with a bit of a health warning and kick the tires on it.
And just remember, I get really frustrated with people who just blanket say, don't trust the agent, or any other label that you want to give it. Just remember, the agent's working for the seller. Their job is to sell that property to any buyer whatsoever at the highest price that they can obtain. That's actually their legal responsibility. So you have to be independent of that. You have to gather information from that, but then verify it and make sure that's appropriate for you individually. It shouldn't be the agent who gives you advice, the selling agent.
We should say that very loud, right?
It shouldn't be the selling agent that gives you the advice.
Spot on.
Certainly take it in and be a sponge and listen to it, but then go out and verify it for yourself, because they're not your agent.
Correct. They are not working for you. They're working for themselves ultimately.
Yeah. The only person who's working for you is someone that you are paying to do the job, a buyer's agent who is independent of all the other parties in the transaction.
Yeah. Now, you put some slides together. Do you want to sort of go through those as a sort of the next part of the conversation? Does that make sense?
Well, I put them in an order, and now that we've started our conversation, I'm going to change it.
Tell me which one would you like to go?
The third one.
Yep.
So I talked about 4 key markets, and then I added a 5th one in. So there you go. So hopefully this is easy to read. It's just my feet on the ground analysis of what's actually happening in Brisbane at the moment in what we have come to uncover of five key markets. And each are acting really independently because of the supply and demand side of the equation, which of course we know is the major driver of price growth. All other things being equal from an economic and an interest rate and a borrowing capacity point of view. So the one at the moment that's really, really still experience quite strong demand, really high buyer demand is the move-in ready market. And what that is properties that have been renovated to a reasonable level. I'm not talking $5 million properties in Brisbane. I'm talking about those sort of $2 to $3 million family homes, maybe 4 to 5 bedrooms. They're ready to move into. You really don't have to do anything. They've got most of the features that families are looking for. Now, there's still a really high level of demand for those sorts of properties in family-oriented areas. And generally family-oriented areas are, the character areas that have got good schools, public and private schools, good transport, maybe a bit of a cafe culture. Generally, there's a lot of character houses. Queensland, the timber and tin houses that have either been renovated or are going through renovation. they're in very low supply at the moment. And one of the key reasons for that is that there's not a high turnover of these sorts of properties. Once people get into them, they tend to stay in them. But also, and this is going to be a very common theme through a lot of what I talk about, there is a low tolerance for risk around renovating or rebuilding. And that's one of the markets that's really suffering. So the move-in ready family homes, high demand, low supply, we are still seeing strong price growth there. And an example I can give you is a property that was purchased in a middle ring suburb about 8 kilometres from the CBD, had huge demand, despite the media or the headlines indicating that the market was crashing or falling. And this was due to good private and public schools in the area, as well as a lot of character homes and a lot of homes that have been renovated. So in this area, renovators, so houses that were maybe on 600 square metres but needed a full renovation, were selling for about 1.2 million on about 600 square metres about 6 months ago. They're now sitting at around 1.1. I'm going to go through some examples of that at the moment. But move-in ready homes in this suburb are selling between 2 and 2.5. They're really high demand, multiple offers from both local and interstate buyers. So the demand is still strong. And the reason for that is it's easy. There's no pain. They know what they're getting. They still have good borrowing capacity. And usually they have something else to sell that might have done okay. So that market, I would say, is one that is going to defy any sort of correction because there is such low supply and really high demand. So that's key market number one in Brisbane at the moment. And the second one that is still in really high demand is the downsizers large unit market. So not your 2 beds, 2 bath, not that kind of stock, but the 3 to 4 bedrooms, 2 bathrooms, 2 car, which is less common, and good facilities in lifestyle areas, and particularly around the fringes of the city, say along South Bank, some parts of West End. Now, these are areas where the 2-bed, first home buyer investor kind of stock isn't performing well, but there's an absolute undersupply of these kind of home replacement units for people that still want some luxury in their life, but they don't want the house and they don't want the maintenance. They want to be able to lock up and leave. Travel is coming back into their lives. So it's that really low maintenance kind of idea. Now, an example of where prices are going with these is we purchased an apartment, a 3-bed, 2 bath, 2 car corner apartment in a particular complex in South Bank about 12 months ago for 1.8. And we've just purchased another one in that same complex for 2.14. Now, it is a superior apartment in that it has a better view. But in that complex, there's only been 3 resales in 5 years. And the reason is, it's got this lifestyle. It's right in the middle of the entertainment precinct with QPAC and all of that lifestyle around South Bank. And people want to, they've earned the right to have fun, to be around this lifestyle. The kids are gone. I don't want them coming back, so I don't want to stay in a 5-bedroom house. And this is the opportunity for this downsizer lifestyle that gives them some freedom as well. So we are absolutely, that search was a really difficult one because there is such little supply of these really quite nice downsizer units. There's certainly a lot coming on the market in the $5 to $6 million range, more around the New Farm area. But in terms of this sort of middle bracket of 2 to 2.5, there's not a lot. It's really hotly contested and there isn't a lot of stock. So prices are still very, very strong in that market. It's a tough market for downsizers to be in, but when you find a good one, they are fantastic to get a hold of. So the next market that are really observing some changes in is the townhouse market. So I'm not talking units, talking, excuse me, townhouses that generally don't have anyone above or below. So it might be either a villa, which is highly sought after but very rare, or a 2-level townhouse where you've got maybe living at one level, bedrooms at another, usually 3-bed, 2 bath, maybe 1 car, 2 car if you're lucky. They're highly sought after. There's really good demand for these, and there's fair supply, but there isn't increasing supply because usually anything that's zoned for townhouse for development is also the same zoning for units. developers will generally yield more profit out of a unit development than they will out of a townhouse development. So certainly in the last 10 years or so, we've seen less townhouse developments and a lot more unit developments on similar blocks. So to give you an idea, there was a sale in a complex about 4 kilometres from the 40,000, 3-bed, 2-bath, 2-car. Excuse me. And in the same complex, very similar condition, similar aspect, recent sale for 720,000. So that's pretty strong growth. Now, townhouses have languished a little bit in terms of price growth. So it really is their time. And the reason is that prices are starting to grow is that, first time around Brisbane within a 10K, 11K radius of the CBD anymore. So the alternative is the townhouse option. So that's what we're really seeing, some price growth in the townhouse market. So I sort of put that as good demand, fair supply, and steadily rising prices. The big change that we have observed in the last 2 years, 2 years up until about 6 months ago, is the Renovator rebuild market. So these are houses that need significant renovation. They might be, perhaps grandma's house that is now moving on to the next generation in gentrifying areas, or knockdowns. And if anyone tuned in last year, and you remember, I gave a huge amount of examples of resales in one street in a suburb about 10 kilometres from CBD. I've got some updates on that I'm going to take you through in a minute with some more sales information that shows you what's actually happening in this market. So there was a huge amount of demand through late 2000 up until about let's call it April, May 2022 this year. Prices went just crazy. Really out of control. So what has happened as those prices pushed up? At the same time, we've had this crisis of supply of builders and also increased cost in building supplies. So people who have bought these properties and have had an estimate of what it might cost them to do their renovation or rebuild are now looking at that big picture and saying, this just doesn't add up. How much I've bought it for and how much it's going to cost me to get the end product is going to exceed what the property's worth at the end of the day. Plus, I can't get a builder. Plus, costs keep increasing, and it all just doesn't make sense. So this market in particular, we are seeing it's on the ground. It's happening at the moment. So there's low demand for these properties. There is high supply because people are putting them back on the market that have purchased in the last couple of years and can't do the rebuild or renovation. And we're seeing prices fall in that market. Then we have the old 2-bedroom units, modern ones, not old ones, the modern ones. Buyer demand there has actually ended up being steady. Supply is still quite high. And I know there are a few developments that have been sitting in mothballs for a little while that are coming back on now. And there's been just a very, very slight increase in prices, which is better than the decrease that we had been seeing for the 3 or 4 years leading up to COVID. So they're really the 5 key markets and what the direction that buyers are pushing those markets at the moment.
That's very interesting, and it's very important how contrasty it is, right? And I think the other point that you make is really important, that it's not like a steady state, right? So some are up, some are down, some are down, some are up, and it'll move again.
Yeah, and this is what we're seeing now, and I think that's what I try to say to people is, we can only observe and make commentary on what is happening now. What could happen in the next week or 2 weeks could be vastly different, because buyer behaviour is often influenced by what's going on with the media, interest rate rises, supply within the market, and a whole lot of other factors. One of the things that I don't know that we all could have anticipated was the massive impact on the construction industry and what impact that has had on the property market. Yep. Because it not only affects new builds, it not only affects your new house and land packages and off-plan apartments and those sorts of things. It has the flow-on effect to people who are renovating, people who want to knock down in established suburbs and build a new property as an infill within an existing suburb. So I'm not sure that we could have really anticipated that storm of effect that has happened from, and it goes all the way through to the war in Ukraine and the supply issues and China, and all of these things are impacting on the construction industry, and that's a whole different episode that I am not the expert to talk about, but it has an effect, and it affects some parts of the market in different ways. So what we've seen is it's affecting the renovation, the rebuild market, but it's also having such a huge effect on the walk-in, ready-to-living properties because the demand is so high for that certainty now.
No, absolutely. I see that in my surveys too. And of course, part of it is the uncertainty, because if you're actually involved in a construction cycle, whether it's a homeland package or whether it's a renovation, you don't know what the cost is going to be. Right? That's
the time frame.
Exactly. So basically, you don't know where you are. And whilst you might have a fixed price contract, there are always sort of exclusions and variations. And the other point, of course, is all of the construction companies that are falling over. That's another factor that people are also having to deal with. And in fact, one of the questions which we might come on to in a little while is somebody who's in the middle of that at the moment, because they sort of assume that the Queensland insurance structure, because basically there is a sort of a backstop from the state, but it's actually not particularly effective, right?
Look, they have to be at a certain, and again, I'm not the expert on this, but they have to be a certain point and have paid certain things. So
correct.
That's a really tough situation to be in, and no one could have anticipated that was coming. No,
exactly. So we'll do it now. This was somebody who'd bought Homeland Package. They signed the contract, they got the land, they got a builder who was actually part of the deal. So they'd sort of, signed off and everything. And then they started, so it's about 1/3 built, and the builder fell over. And where they are now is waiting to see whether they can find another builder and whether that other builder can effectively pick it up based on the insurance that was there because of the state insurance, that's the backstop, as it were. But everything's frozen because it's got to be sorted out, not just for that particular one, but for all the other ones, all the other projects.
All the other ones as well.
So you've got this sort of huge uncertainty. So, basically this person said to me, well, I'm ended up now, I'm still in rental accommodation. I expected to be in by now, but I'm now paying
that's another
rent.
Cost.
Exactly.
Not only is there rising cost in construction, but the longer you're renting a property in lieu of living in your own home, you've got a mortgage that you're paying on the land and wherever you're up to in the construction phase.
Correct.
And the rent that you're outlaying.
Yep. So it's a double whammy, right? In the meantime, rates are going up. The time frame is unknown. The amount of coverage under the insurance scheme is unknown. And the people who are sort of involved are saying, well, the new construction price will be X plus quite a lot.
Plus.
Right? Because simply they can't do it for the price. So I think we're going to see this as probably one of the most significant fallouts, not just in Brisbane, but across the country, where you've got these half-finished, half-baked, failed new construction. And I think last year we were talking about the risks of, this sort of homeland package stuff and saying, well, there's a real issue here. Well, it's coming home to roost, unfortunately. But if you're in the middle of it, you've got no control.
And it's painful.
Yep.
It's heartbreaking. And this just adds to, I hate to change the topic, but because this is a really difficult thing that people are going through, and maybe it starts to raise the question as to, do we need to relook at how construction contracts are put together? I'm doing a renovation at my moment. I know it sounds insane, but I'm doing a renovation of my own home at the moment. And I sat down with the builder and I said, this has got to work for both of us. I've got to know what my costs are and control it to a degree, but I also need to make sure that you don't go broke. So how do we make sure that we're covering each other? I've done business with this man for 12 years, so this is a conversation I can have. But maybe it is re-looking at how these contracts are put together. Maybe it doesn't work in an environment where you cannot control the costs of your inputs. When copper goes up, I think 41% was the last I heard, that affects the electricians and it affects all sorts of supplies that go into a property. Builders can't absorb that. it's not reasonable for anyone to think that you can absorb that kind of price increase in a supply that you have no control over. So we're also, we're facing a massive labour shortage at the moment in all sorts of industries, but also in the building industry. We just haven't had that influx of people from overseas, sort of nursing and construction and hospitality and strawberry pickers. We haven't had those people that have often come from overseas and made Australia their home for a period of time, whether they've been on work visas or whatever the case may be. We just haven't got that extra labour force that often fills jobs that perhaps locals aren't prepared to do or don't want to do or are otherwise qualified to not do.
No, absolutely right. And I think it just shows you the level of uncertainty there is. People have called it a profitless boom in the construction sector, right? Because basically,
isn't that an interesting way of putting it?
Because basically it means that people are running around in ever-decreasing circles trying to do stuff, but then everything's taking a long time, and structural steel's up 40%, and if you can get it, right?
And if you can get timber, if you can get
exactly.
What did I hear? 9 months for roof frames, trusses.
Correct. Exactly right. You can put the walls up.
That's a long way to. It's a long time to wait to put your roof on.
Which sort of explains the point you made earlier on. I think it's really interesting, and I see that in my surveys too. That if you've got a property that's oven ready, as it were, doesn't
move-in ready,
then it's going to actually be much more attractive than one where you've got a lot of stuff to do to get it sorted out.
And it does.
I'm seeing it in other areas as well, where there is definitely some sectors where there is still a lot of momentum because it's there and available.
Yeah, and I think you're right. But I think the other thing that is being heavily pressured by a number of things, and the challenges in the construction industry has an effect on it. But it's the rental market, and I think this is the big story that people are just sort of catching on to, like really, really catching on to. We've been talking about this since about April 2020 and the concerns that we had about the supply and the rental market. And often landlords and tenants are put on opposite sides of the fence. But, I really believe that each relies on the other. And if there's not a balance, if it gets out of balance, which is what we're seeing now, it causes homelessness, and this is happening at an increasing rate and at an absolutely heartbreaking rate. These stories of people not being able to find houses to live in, who have jobs, who are good tenants in any other marketplace, just simply can't get a house at the moment because perhaps their landlord has sold the property for a variety of factors, and I'm going to go into that in a moment, what's led up to this particular crisis that is actually real at the moment. But they can't get into anything else because there's not enough supply and there's too many people competing for similar properties. And this is not just a Brisbane problem, but it is a really big Brisbane problem because we've had such an influx of people from southern states and expats repatriating.
Absolutely. And in fact, Cookie Boy asked this question, what about people out there waiting for their properties to be repaired from the recent floods? Certainly in northern New South Wales, that's a huge issue. There's a lot of people, 6 to 12 months later. And on the south coast, where they had the bushfires 2.5 years ago, they still haven't been able to get started. So, wherever you look, you've got a major construction issue there as well.
Yeah, you do. And look, Lismore is my hometown. That's where I grew up and went to school. And there are still people down there who don't have electricity. They're working on barbecues and generators if they can get them. They don't know what their future is. And often the locations that are major flood affected are lower income areas because, of course, they're the cheaper places to either buy or rent. So there is a huge problem that is down there, but it also affects the city centre. So the heart of the city has actually been affected there, and that's not just unique to Lismore. There are other locations as well, but that's obviously something that's close to my heart. But in Brisbane, there's still homes that aren't repaired as a result of the floods. My place got affected not by flooding, actually by lightning strike, ironically. And I still haven't been able to get the insurance sorted.
Yes.
And, that's a minor thing. Imagine if I couldn't live in my house and I was still waiting for insurance to sort these sorts of things out. So it all comes down to quite a shortage of construction capability. These guys in construction, they are working their butts off.
Yep, they are.
But there's just not enough of them.
Yep, absolutely.
Yeah.
No, it does show you the very thin supply chains and the very shallow construction temperature that we got at the moment. And wherever I look in my surveys, I see it again and again. There are properties that can't be fixed up. There are areas where they can't get the labour. There's areas where they can't get the materials. And it's worth just recalling, of course, this was artificially created by government policy, right? So the government actually brought forward a lot of demand with all of its incentive programs, right? So this was an engineered problem.
Yeah. I think, look, I haven't gone into that side of things, but I look at the outcome side of things, and there's a whole lot of stuff. Not only the incentives that brought on this demand for new product, and home builder. Home Renovator, was it? The scheme that was to encourage people to renovate their own homes. All of these things brought on a huge amount of demand and put a lot of pressure on builders, who then weren't able to deliver because they couldn't get the suppliers at the price that they'd quoted.
Yep.
So, could you anticipated that? No, but you could have been a little bit more careful about policy that encouraged so much action in one industry. It's just so typical of taking a cricket bat to swat a fly. Yep. And I don't know how many times we've seen that. And we're going to get into Queensland land tax in a minute, because that's just I'm going to blow a poofle valve over that one. But look, let's go back to renters, because it has a flow-on effect there. And I talked about renters and landlords often being put on the opposite sides of the fence. But let's have a look at this, because if one is in imbalance, then everything goes skew-if, and that's why we've got to the point that we actually have now. So there's just under 10 million households in Australia, and 31% of those households are rented. So 26% of all households in Australia are provided by private landlords. So just over a quarter of all of the properties in Australia where people live are provided by private landlords. 26% of all households. So 83% of rental properties are provided by private landlords, about 2.1 million households themselves. Only 3% in Australia are provided by social housing, and that's been decreasing census on census. Majority of people that rent are under 35 years of age. So that's a very vulnerable and very needy. You often aren't in a position, in a career-wise or an income sense to buy at that age. You actually have to have somewhere to live. So a vast amount of people depend on people like you, me, other private investors to provide their housing, and it seems insane that any level of government or regulators would want to cause harm to that sector. But a lot of policy and discussion from all sides of politics has actually put a lot of pressure on the private rental sector. There's so many stories of people who can't find a home to live in because there's just none available. The Queensland government today announced a housing summit, and in her announcement, the Premier said that she blames Victorian and New South Wales buyers for buying houses that renters used to live in. Let that sink in. So she's single-handedly blaming the rental shortage on people moving to Queensland post-COVID from New South Wales and Victoria. Goes back a lot further than that. So back in around sort of 2017, 18, there are a lot more rentals than there was demand. So prices were sort of dropping. And we certainly saw that within the properties that we manage. APRA came in around 2017, 19 and had a huge impact on investor lending. So there was actually less investors coming into the market. Then we had COVID. So there's a lot of regulation around that time. COVID hit and some properties had massive drops in income. So think about 2017 dropping income, 2019 dropping income, 2020 dropping in income, rents were going down, but owners still had to pay the mortgage. Even if they deferred it during COVID, they still had to pay it. And it hurt a lot of people financially. So we also at that time in most states had some tenancy reforms that were proposed. Some have come in, so Victoria and some in New South Wales. Parts of the legislation have been introduced in Queensland, and they were initially and somewhat heavily weighted in the tenants' favour, and this kind of turned private investors off. So there's a real push for things to be a bit more balanced so that we could keep private investors in the marketplace, but also look after tenants' rights and make sure they're looked after. To see prices in 2020 really start to push up. You know, it surprised everybody, just knocked our socks off. How post-COVID could this happen? A whole lot of reasons might go into it. There's a lot of commentary around that. So what this led to was an opportunity for investors to say, oh my God, this has been tough. I'm going to take my gains and just breathe. So somewhere between about 21 and 23% of private rentals in Queensland were sold off during the 2-year period after about, up until about now. And that was largely because investors had a little bit of enough, but there was also some gains there for them to say, oh, okay, this property's actually done pretty well. I'm going to get out. I don't know what I'm going to do with my money, but I'm just going to get out of property for now. During that time, rents have sort of been increasing as well. So around 2021, 22, we're just starting to see rents be above that 2017 level. And just to give you an example, one property that we recently rented was rented for $1,100 in 2018. It rented for $950 in September 2021, and it's now renting for $1,150. So it's not a huge gain, but it looks like a big gain compared to what it was rented for last time, but it's actually just got above the 2017 level, which was the last kind of peaking period for rentals. So this has not been an easy time for landlords. And whilst the headlines might talk about this being a 21% increase, that's 21% above the previous rental price, they're missing the point that it's actually only 5% above the 2018 level.
Yep.
Now, that's hardly exciting, and it's certainly not alarming, is it? Like, we've got to look at the bigger picture and how we balance this out so that we get the right balance for investors and tenants, because the synergy's got to be there. They work together. They can't work in opposition. The thing that I have the most concerned about is the Queensland government's land tax. Now, this has been legislated. This has been pushed through at such a rapid pace that appropriate consultation wasn't undertaken. And interested parties now are starting to look at this and say, this is a big problem, both from a taxation point of view and from a property point of view. 12% of the owners whose properties we manage have called me to ask me what's going on and to say if this goes ahead, they will sell their properties. Now, if that's just my little part of Queensland, imagine what that could do to the supply of rental properties across the state. Now, you did an episode on this last week.
Yeah, I did.
Yeah.
Yep.
So there's an awful lot of information out there. It is something that people need to start getting really, really loud about, because it's a bad tax. I'll say it. It's a bad tax. It is something that has to be questioned from a federal level, because Queensland is imposing a tax and collecting tax for Queensland infrastructure based on people's holdings in other states. And one might question whether that is constitutionally correct.
Well, there's a whole bunch of issues there, of course, and the first is they haven't done much modelling on it. It almost seems to be an ideological decision that was taken, back then. They said, well, we've given 500 and something days, a couple of years for people to sort of figure out what to do, as though that magically solves the problem. But the fundamental issue is
it won't take people long to work out what to do.
Exactly.
And it will be sell their Queensland properties. There's no interpretation. It will be, I'll just get rid of it. Whether people own one property in New South Wales and one property in Queensland, or they own 40 properties around the country. There aren't many people who own that many properties. Most investors own one or two properties. They're not the high end of town that supply these properties for renters. They are everyday people who have made a decision to invest in property. And if those people simply say, it's not worth me owning property in Queensland, I'm going to sell that and I'm going to invest in Western Australia instead. Suddenly there will be less properties available in Queensland, creating even more stress on renters and more of a rental crisis. But there'll potentially be more supply of rental properties in other locations, which may lead to a decrease in rents, which will be good for renters. But it will actually potentially have a negative impact on first home buyers, because often first home buyers and investors are looking at similar types of properties in similar locations. So if you've got investors refocusing all of their interest out of one state into all the other states, this could have quite a huge impact. And I am passionate about first home buyers. It's an area that I really work hard in, and I want first home buyers to make really good decisions. But if you've got investors competing with first home buyers in all the other locations, there is a significant unintended consequence that could have far-reaching impacts on first home buyers in other states of the country.
And the point you're making, I think, is a really important one, because all of these things are interconnected, right? You can't go about fiddling around with rental structures over there without the fall over effects in terms of first time buyers and interstate and all those things. And that is, again, because what people try to do, particularly politicians, they try and fix a little piece, another piece of elastoplast, sticking plaster over the top of that one, where we'll try and fix that, and then we'll try and fix that. No one's looking holistically, right? And I've been saying this for the last decade. There is no holistic housing and property strategy across Australia, and that's the problem. Isn't. That's the problem.
And as long as we've got states acting independently and not talking to each other in these matters, we've got a Reserve Bank that makes decisions about interest rates from a federal perspective, but most other aspects of housing is state-based. And our research, Veronica and I have done a huge amount of research into the differences in legislation in terms of property law and legislation and how it impacts on property buyers, property owners, tenants, and so forth. They're so vastly different that if this was simplified to the degree that at least there was some commonality, and one state was talking to another and they were understanding the impacts of decisions that they could have, they actually just, I think, just don't care about what any other state is doing, thinking, or the impacts. And I think that's a sad thing, because at the end of the day, we're all one nation. If COVID showed us anything, you actually can act in somewhat of a together and united way. But
Quick,
that
put
the
boundaries up.
Yeah, that goes out the window the moment
let's stop people migrating across interstate, right?
No, but please come. Please come. We've had the highest level of net migration since about 2002 into Queensland, and I can't blame anyone for coming here. It's beautiful, but you've got to live somewhere. No, and we're not making more houses, and the construction, with the slowdown in the construction industry, is going to have a bigger impact on that. So once my international migration opens up again, we're going to see another influx, and I think the estimates are somewhere around 220,000 people in the next 5 years are expected to come into southeast Queensland. They got to live somewhere. Absolutely.
Well, talking about numbers, this came out today from the ABS. I thought it was worth bringing up now. So there are about 10,833,700 properties for residential development, dwellings across Australia, right? Mm-hmm. And they said in the last quarter, they rose by 45,200, right? So that, if you multiply by 4, that's basically just under 200,000 new properties being built every year.
Across the country?
Yeah, that's across the country. Now, they didn't give a breakdown in terms of where and how, but they also showed that the value of stock's dropping a little bit. Not dramatically, but a little bit. But I thought that number, 45,200 new properties, compared with the last quarter is quite interesting, right? Because if you think about the migration story that some people are talking about being quite relevant now with more people coming in, well, that's not a lot of new not a lot of new properties, but there's no information about the distribution, right? And
state-based or otherwise.
Yeah, exactly right. And we know from the other ABS statistics, a lot of people moved up to Queensland either to live there or to buy investment properties there. One of the reasons why they buy investment property in Queensland is that at the moment the gross and net returns are better in Queensland than they are in New South Wales and Victoria and the ACT, right? So if you were thinking about interstate investing, Queensland is pretty attractive.
It was.
Won't be.
It was until very recently. And look, I laugh because it's comical. It is actually horrendously comical at what an impact this is actually going to have. And I can't stress it enough. If it doesn't get repealed, and it's certainly our desire to see that legislation repealed. If it doesn't, then the tax will start to be levied from the 30th of June 2023. And I would expect that, based on the conversations that I've had with investors who have properties in multiple locations, including Queensland, they will simply sell. They'll divest.
Yep.
They won't think twice about it.
Yep.
And I don't see any benefits, any positivity for any part of the market, apart from potentially first home buyers. So there may be some more supply come on as a result of that for first home buyers, but it will dramatically decrease the supply of rental properties in an already squeezed market that is under incredible stress.
And I think that other statistic you quoted about how many people over the last couple of years sold their investment property in Queensland, again, I saw that in the other state data as well from my surveys. We've got quite a few property investors who can't make it work now. They've got a bit of a run-up on price because of what happened over the last 18 months because of the ultra-low interest rates and the government stimulus. So that now's a good time to get out and try and, get that capital crystallised before prices fall a bit. That's what's actually happening at the moment.
That's the thinking. Yeah, it is. I guess, you'd be talking to your financial advisor about what do you do with the money then? Where do you invest it?
Well, that's of course the other question now. Yeah.
Where do you put it now?
Exactly right. But it is an interesting question because the net returns on a lot of investment properties, so not the gross returns, not the sort of the theoretical price versus theoretical
gross
maximum rental, but actually in real returns, so taking account of the mortgage and the other things, the rates and everything else, right? Often those net returns are very low and many are in negative territory now, which means that you're losing money if you're not getting capital gains.
Yeah, and we could debate the whole positively geared versus negatively geared and all that sort of stuff. This is not the forum for that. But you and I are big believers that property is a long-term investment strategy. It's not a strategy for people who come in and come out. There's too many taxes. There's too many costs. There's too many things that go into it that make anything less than about an 8 to 10 year time frame worthy of putting your money into. So anyone that's looking to kind of time an exit or an entry based on market conditions, maybe have a good chat to somebody who knows what they're talking about before you flick it. But there's tax. So,
well, you make a very important point, and it amazes me how the number of people I interact with have such a short-term view of this property investment thing, right? Whether you're actually moving
interest rates are going up, we should sell. Well, hang on, no.
Yeah, exactly.
Have a bit of a think about that.
Exactly. And, if you're not thinking 5 to 10 years, then you're not thinking right.
Yeah, and talk about we talk about lead indicators on when markets are changing, and maybe if we pop up the slide, I think it's the first slide.
Yep.
Just when I talked about those 5 different markets, and I want to talk about the people have tried to time the market, because this is a really good example of where you could really shoot yourself in the foot if you were trying to time an entry or time an exit. This is a slide that it's the first, I don't know what, half dozen, how many's there? 1, 2, 3, 4, 5, 6, 7, 8. First 8 entries in that table were a slide that I put up last year, and they were all sales in one street in a suburb called Wavell Heights, which is about 10 kilometres from the CBD. It's a very low density suburb, so not many units and townhouses at all. It's not been zoned that way, but it does neighbour a high density suburb with really good transport. So some good fundamentals in this suburb, quite well sought after, some elevated positions with city views, bigger blocks, so most of 600, 800 square metres. So in this one street, there was a sell-off. Just look at the prices there. So it started I started with some comparisons in 2017 that properties were selling around that sort of 600,000 mark. And then there was a big run through to September 17 where almost exact. So these houses are all on the same side of the street in a street that is reasonably flat across the road from a park. The houses were all in really similar conditions. So comparability was really, really strong. So a really good indication of what was happening in the marketplace. So if you can see down to number 20, they're sold in September 21 for 950,000. And that was, sitting just above the median at the time. There's been 2 sales since then that there's been a lot of sales since then, but the 2 recent ones that I wanted to show people, to show what's happening with this renovator market and how really lose some money, is a sale in March 2022 of 1.235 for a comparable property. So it was a Renovator, 2-bed, 1 bath, and it was sold as a knockdown. So the people that bought it to knock it down. It was on a busy road. So I remember I was talking earlier about the fact that people during that high FOMO period weren't differentiating between properties. They weren't differentiating between quality, location, aspect, all of those indicators that go into differentiating between one property and another and doing an analysis on what something's worth. People just weren't differentiating. They were just saying, well, if that's sold for 1.25, I've got to pay, 1 point whatever to get, I've got to pay that little bit more regardless of where it is or what it is. So the median house price at that time in the suburb was 1.1 million. And these people paid 1.235 million for a property on a busy road that they were going to knock down. This market almost ground to a standstill overnight as the construction industry, the failures within the building industry, prices were going through the roof. What people thought that they could build or renovate a property for, that just went out the window, and suddenly the equation just wasn't adding up. There was a sale of a property in a nearby street in June 2022 for $1 million. So 600 square metres, slightly smaller block of land, but reasonably comparable. And that was a tidy, simple 3-bedroom, 1-bathroom property on a nicer street. So not on a busy street. So thinking about the differentiation. FOMO's gone out of the market. People are starting to differentiate between the very vital aspects of properties, and that is a market that we are really seeing absolute changes in. So in terms of timing the market, I'll be really, really careful, but there can be opportunities if you're of that risk profile. At the moment, I think in that kind of thing. There's another one in Ashgrove that sold for 1.32 about just over 18 months ago. That resold with no changes whatsoever at auction for just over.
You make a very interesting point about that particular area, and in fact, Cookie Boy, one of the stoutest members of the team here on the channel, has done some research in terms of property prices, and particularly looking at Wavell Heights, right? So he actually put up this example, which is actually a house, 5-bed, 3-bath, listed 62 days ago. Price dropped from 1.295 million to 1.2, right? And listed.
So that's 62 days on market.
Ago. Yeah, which is quite interesting. Yeah. So that's the 5th of September. So that sort of validates that things are slipping. And here's another one in Wavell Heights. Again, it's a house. It's a reasonably reasonable size, etc. But now 1.05 down to 975,000 on the 4th of September, right?
Do you know what's really interesting is and this is really interesting because unlike Sydney and Melbourne, one of the lead indicators is what's happening to the market, if we want to call it that, and I put rabbit ears around that, is a fall in clearance rates. So properties that aren't actually selling at auction. So that is one of the lead indicators in the Sydney and Melbourne markets because they have so many properties that are auctioned. In Brisbane, less than 10% of properties are auctioned. So it's actually a really poor indicator of what's happening with the marketplace. What we see as some of the early indicators, and this is a very local aspect, so each area that you look at, you need to understand what the early indicators are as to which direction a market or a property type is going. It sort of was, during 2021, it was, we'd walk into the office on a Monday and say, did you see what they paid for that property and, blah, blah street? And we'd be just shaking our heads and updating our spreadsheet and doing our indexation, going, all right, well, how much are things going for as a premium at the moment? And we were indexing for price growth almost on a daily basis based on actual results. When we start to see indexing start to slow, the numbers at open houses decreasing, multiple offers on properties decreasing, and sales taking a little longer, we then start to experience agents calling us instead of us having to chase agents. And this is one of the really key indicators of a turning market for us. And then the next thing that happens is prices start to be put on listings. So if you go back 12 months ago, you would have not seen a price on a listing on a real estate portal in just about any market because it was almost impossible for an agent to price. They just didn't know what a buyer was going to pay. So they'd simply say for sale or by negotiation, or there just was not price information. They didn't need to put it on. But if you go through a suburb now, I would estimate that maybe 60% of properties will have a price on them now, and that just didn't exist 12 months ago. And the reason for that is they're trying to bring buyers to the property and entice them to actually start engaging in the negotiation process. So that's a real recent, within the last 3 months, that is a real recent development in this market and shows us there are certain parts of the market that are slowing.
It's interesting because Cookie Boy earlier on said it's the last few weeks, this is a new, very recent development that he's seeing as he does all of these pieces of analysis.
Very observant. Yes.
Well, he bombards me with lots of these, which is great because it gives me a sense of across the country, right? Because, as you say, if they don't tell you what the price is, you got to ring up to find out. That tells you something. But once they actually start putting prices and then actually start reducing the asking price, that tells you something. And his was just one more to finish the suite. This is another one in Wavell Heights again. Was on at 999,000 132 days ago, and then it was dropped. Now it's at 899,000. Right now, I'm not saying that that's necessarily a perfect example, and I don't know the background. There might be something else wrong with it. I don't know. But when you start seeing these trends, same postcode, lots of them dropping back. 50 to 100,000. On the sites there, that tells you something quite important, I think.
Yeah, a few things there actually. Interestingly, I think a few of those examples were properties that needed work, so they fit into that category we talked about.
Yep.
But the other thing that we see when a market is turning is seller behaviour. So buyer behaviour drives a rising market, a lack of supply, but also a demand, a fear of missing out. It drives price growth to a large degree. But when a market turns and the demand softens a little bit, sellers still think that they should be getting that bit more than that last property sold for. So that's when you start to see agents having to say, all right, well, if you think it's worth that, let's put that price on there and see what the market tells us. So it's a way of an agent saying to a seller, let's see if there is anyone out there who will pay it. If there's not, and you really want to sell, we're going to have to reduce the price until we meet the market. So it is one of those factors that we do see in a turning market, because the sellers need to be re-educated as to what the buyers are willing to pay in a changing market. I
want to explore that, meeting the market, because that's something I hear a lot at the moment. right? Which basically says, Mr. Vendor, you've got last year's spectacles on, you need this year's spectacles, right? Things have changed, right? And the whole point of acclimatization and getting people to understand that, you could have sold then and got a bigger number than you can now is actually quite a complicated process for agents to sort of navigate, isn't it?
Yeah, it is. And particularly for inexperienced agents, if they haven't been through a few market cycles. And I think, it's my belief that to be experienced either as a buyer's agent or a selling agent or anyone in the property market, you have to have been through at least 3 market cycles to understand the intricacies of it, because otherwise you're just as green and as just as much a learner as a person who's only buying for the first time. Yep. So it's those intricacies that an experienced agent who has been through a few cycles can step back emotionally from and say, we don't control the market. All we can do is tell you about what the market, or the buyers, really the buyers of the market, what the buyers are doing, how they're responding to economic influences, to labour market factors, to supply, all of those factors that are influencing buyer behaviour. At the end of the day, it's the buyers who pay the price. It's not the agent who sets the price. And that's the thing about property. There's no recommended retail price. You look at comparables and that's a guide, but then you've got to index for which direction the market's going for. And that is something that it takes a long time to learn and understand. So for an agent who hasn't got that depth of experience, it's almost like they can get themselves into a bit of a pickle, sort of saying, oh, yeah, well, that one sold for that, that sold for that. I'll list your property and I'll get you, it's a pretty strong market. We'll see what we can get. Agents often are reluctant to give a price exactly, particularly in a rapidly changing market. But if they're inexperienced, then they could spend the next 60 days of a listing, an exclusive agency agreement, saying to the owner, it's just not out there. You're going to have to reduce the price. And the owner's saying, yeah, but you told me this. So it's the script and dialogue that agents use around that in a changing market to set the owner for the conditioning or the educational aspect of which direction. Because it's awesome when it's going up and an agent says, I never thought we'd get that price. How awesome am I? I'm so good. But when it's going down, they've got a lot more work to do. And they have to find buyers and they actually have to sell the property. And that's a really different skill.
You've made a very important point there, right? In the rising market, it's blooming easy to be an agent, right?
It's easy to sell a property. It's hard to list a property as an agent. Yeah.
Whereas in a falling market, you've actually got to work a lot harder. You've got to actually, try and burrow away until you can find that market meeting point between the buyer and the seller. It's a whole different ball game. And if you think back over the last decade, certainly in the major centres, mostly agents have been in the upswing rather than the downswing. So it's a very different way of thinking about it in this current environment.
Yeah, it really is. And it's a very different skill set. It's a very different way of interacting with owners. But it's also, there's been this period of time where buyers have been in such high supply. There's been so much demand that selling agents haven't had to work very hard or take a great deal of time to work with buyers, that they really have just thrown themselves at the mercy of the seller and said, can you please take my offer? How much will it take? So it's agents haven't had to really work that hard in that space. They've had to work really hard to get listings because they are the things that have been in short supply. Turn it upside down. We've now got less buyers and agents have to work harder to attract them to the property, to get them interested in the property, and then to negotiate with a buyer to pay a price, to get the best price out of them that they can, and then to talk to the seller. I believe this is the best that we can get out of the market at this point in time. That's a really different conversation to what they've been having for the last 18 months.
Absolutely. Now, I just want to put this one up from Stripey Cat a little while ago. He said, thanks for the super chat, by the way. I don't like vacant properties, but a tax incentive on rental earnings on top of wages could free up more houses. Is the tax whip or tax carrot a better option? And that makes a point. maybe we've got to think creatively about some different ways to deal with this if we're going to ever deal with the issue of particularly the rental sector. But certainly the current strategies are just going in the wrong direction, aren't they?
Yeah. Do you know what we haven't even touched on? And it's a whole nother episode, is the Olympics.
Yes.
Because we're not that far away, really. We're only 10 years away from the Olympics. So there's a huge amount of infrastructure and projects and building and so forth. And we're in a construction crisis. We're in a rental crisis. But during Olympics, what we've seen in other locations is that a lot of long-term rentals get taken out of the long-term rental pool and put into the short-term rental pool. So that decreases the amount of long-term rentals that are available again. So we've got this some of the during COVID, some properties were taken out of the short-term rental pool, the holiday lets and so forth, and put into the long-term rental pool. They're being pulled out again.
Yep.
More will be pulled out around the Olympics, where people can make extraordinary money. So should that be taxed at a different rate? Yeah, I think so.
Yeah,
I do. They're not long-term rentals. They're not homes that people are living in. They are higher income earning for a period of time. They might have greater levels of vacancy as well, but they are not adding to the long-term housing solution by being in those rental pools, and nor, unfortunately, are holiday homes that people reserve for themselves in their own personal use.
Well, I did a show the other day about vacancy rates and how many vacant properties there are around the place. It's quite interesting, actually, because there's a lot of mythology about this, and of course the census came out and gave us a bit of information, right? So what I've done, I've incorporated that into my models now. So for every postcode, I now have the number of vacant properties and the proportion that are vacant. It's quite interesting.
So interestingly, we had a very brief discussion about this earlier, and I was sort of scratching my head and I thought, I don't know that I'm on the same page with you, but it's just clicked with me. You're actually talking about properties that are vacant, not that are vacant and available for rent.
No.
So I want to differentiate from that, because like the REIQs and the REIVs also, they talk about vacancy rates, and that is the percentage of properties that are available for rent. We're not talking about that. These are actual vacant properties that you're investigating.
Yeah. So the way it works is the census reports who was actually at home on the night. Yeah. But they also have a lot of properties where there was no one at home. Yeah. That's what I'm talking about, right?
Yeah.
And I'll just
different.
I'll just give you this. Yeah. This happens to be 4,000, right? This is actually the centre of Brisbane, right? And so there's the total occupied properties of 8,781 in the centre of Brisbane, right? Of which 763 or 8.7% are houses, 7,652 are units, that's 87.1%, and then there's other, that's like living over a shop or those sorts of things, right? But they also had the vacant properties. So those are the ones that had nobody in them. 21.3% or 2,372, right? Which is a fascinating number, right? So that those numbers,
a lot of properties available.
Yeah.
Or not available. Let's call it not available.
Not available. Now, if I go to Victoria, just to make a comparison, because Victoria was absolutely astonishing. Okay, in postcode 3000 in Victoria, right? So there's a centre of CBD in Victoria, right? 32% of properties were vacant, 10,259, right? Most of them are units in the centre of town, right? So there's something that now, obviously, you can argue potentially that it might be Airbnb, it might be students that weren't there, all of those things. But what's interesting is there's some really hot spots, right, where you've got this high proportion of properties that aren't caught in the census. Right now, nobody seems to me want to know I want to know what's really going on with those, right?
Yeah, that's interesting actually, because you could hypothesize that it is, as you say, it might be students that are away, or but it actually could be people's secondary dwelling.
Could be a secondary home, absolutely right. Or
but they're not, they have two dwellings available to them, or more. Yeah. Yes, and there are people who purposely leave properties vacant.
Correct.
Because there's benefit for them doing that.
Yeah.
and there's no disincentive.
We know, for example, in Docklands, down in Victoria, a lot of those high rises were purchased. They'd never been lived in. They're just there in splendid isolation because, of course, as soon as you live in them, they start to deteriorate, right? Wear and tear. So whereas if you just leave them vacant and sit there and let the property price rise over a decade, so there's a lot of stuff. And there was a lot of noise about this. There's basically across the country, there's 1 million plus vacant properties. Right.
That is a lot of opportunity, isn't it?
It
and something to be brought into the debate, because it's this housing summit that has been announced today in Queensland. Yep. I don't know who's going to be involved in it, and I hope that the right people are brought to the table who understand the on-the-ground problems.
Yeah.
Also the on-the-ground opportunities,
yeah.
Because it is not a narrow-minded discussion that needs to be had. It is a very broad-ranging discussion that understands the implications and the unexpected consequences and the unintended consequences of any decision that might be made. Because as we've seen, if you make one decision, then the house of cards that might fall down is potentially catastrophic for people.
Yeah, and that's the point. All the ones in the past, all the various conferences, federal reviews and things, have just taken a narrow piece of the puzzle, right? Like the housing supply inquiry that was done last year, right, which basically blamed the states. Well, that was really helpful, wasn't it?
Not really.
And there have been, I think, 10 or 12 different things. None of them have actually been holistic, right? That's what we need if we're going to... And the vacant property question, for me, is a really important one, because within that 1 million plus, of course, the extra 42,000 that came on last quarter, right, which were new properties, right? So stock's increasing, right? So we got more properties than we got people and households by quite a lot. So it should be part of the discussion. How do we actually maximise the utilisation of those spare properties? And, does it make sense to keep all that properties completely free? And it may be even avoiding.
And where are they located?
Yeah.
You've obviously chosen two capital cities there. I'm sure there's a huge amount
I've got
in Sydney
map,
as well.
I've got
you've
a
got
map
a whole
across,
map of this.
I've done a geo map across the whole of the country, right? And so there are some hotspots like down in some of the holiday areas, which you'd sort of expect. So on the coast, right?
Yeah.
But there's also some other areas too. But interestingly, there's no correlation between areas where there's mortgage stress and where there's spare property, which I thought was, because I sort of wondered whether but no, it's a completely different. So there's a whole new story here, which I'm just beginning to unpick. So that's something else we'll get into.
Looking forward to that, because when you do the data, I get to do the on the ground stuff, and then it all comes together in a really interesting conversation.
Absolutely. Well, that's why we do these things, right? So we shall pencil that in for the next conversation. Now look, there's 10 minutes left, and I wanted to pose this. This is a real life question from one of our viewers, right, who was very pleased when you were advertisers coming on. Last year, about 8 months ago, they bought a unit. It's a high-rise unit in the centre of Brisbane. It's a 2-bedroom, pretty standard unit. Mm-hmm. They just stretched themselves to be able to get the mortgage, and they paid what they had to pay to get in, but it was right at the top of their budget. And they're now panicking, right, because the mortgage has gone up, and it's going to go on going up. The value of the property is going down, and they've got now buyer's remorse. So my question to you is, how do you deal with buyer's remorse, and how do you, in a situation where things are changing so quickly, how do people get their head around this?
It's really hard. It's really hard to look at that from a it's already done point of view, because units within the Brisbane, within certain locations within Brisbane, and certainly inner city is one of those locations, there is a large supply of them, and there is a large pipeline of them as well. So, we've talked multiple times about the supply-demand equation, and units generally aren't the preferred housing type for people in Queensland. They would prefer a house or a townhouse if they have to, and often it's people who are more transient that might look at units as an option getting into something else. So there's incredibly helpful sites for people who are considering units as an investment opportunity to do research in the lead up to making a decision. And these are online sites that you can actually go into and have a look at the development pipeline, and it actually shows graphically where different developments have been, proposals have been submitted, which proposals have been approved, which ones of those proposals are under construction, which ones are completed and for sale. So you can actually really get a really good sense of the supply side of the equation very quickly. And if you do that for Brisbane City, there is still quite a bit in the pipeline yet to come online. It's probably not what these people want to hear, but it is something for anyone else considering that type of property. And I guess the thing that we always go back to is looking at fundamentals. What are the fundamentals that drive demand for different property types? And obviously what buyers want is a big part of that. Supply is a big part of that. Rental demand is a big part of that. Transport obviously is really good within the CBD, but it's the thing that really makes that a difficult long-term investment option is the supply side of it, and there is still a lot to come on. So buyer's remorse is something that a lot of people experience. And if you're in real estate for a good long period of time, then generally things will even out over time. But it might be one of those kinds of investments that you might have a look at during an up cycle to see if that might be one that you didn't hold for a longer period of time.
And the point there is, you and I said before, a dog is a dog is a dog, right? So, in other words...
I didn't want to say that, Martin.
Well, I've said it, right? Because not all property is equally good or equally bad, right? So we can't judge from this conversation where on the spectrum that particular property is, right? If you bought a dud, it's still a dud, potentially, right? Which means you've got to actually think harder about what you do. Whereas if you've bought something that has long-term sustainability, then maybe the hang in there and see how you go sort of story works, right? But you really have to do some thinking about what have I got? What have I really got, right? And do some comparisons, right?
And I think get some advice because just what you read in the media or what I'm saying at this point in time, I don't know the individual property. It might be, we bought a 2-bedroom apartment in a beautiful MacArthur Central, I think. No, not MacArthur Central. It's a sort of turn of the century building in the middle of the city, and it's 2-bed, 1 bath, but they're highly sought after, incredibly ornate, beautifully appointed. I think there's only 4 levels of 3 on each level. Anyway, they're highly sought after. They rarely sell. Yep. So that is a good investment because there's scarcity around it. It can't be reproduced and won't be reproduced. But it's the ones that are easily reproduced and are being reproduced that you might have a look at and say, what is the opportunity
This
cost?
is on the 18th floor. So
that's a big complex.
An 18th floor and built within the last 2 or 3 years.
Yeah.
Oh.
I'd probably get some independent advice around that one. Don't panic. There's no use panicking.
No.
You own it now, but have a look at when that might be something that you might look at divesting because the opportunity is too great. Opportunity cost is too great to hold it.
And just the object lesson here, why I brought this one up was back then, FOMO was all the rage, particularly in and around Brisbane at the time. Everyone was rushing to buy, right? Shows you how quickly things can change.
Yeah. And that was that when people weren't differentiating between one type of property or one property and another. It was get into anything at the price that you could push yourself to buy, and that isn't necessarily good investment strategy. Breathing and taking your time and getting good advice and making sure that you are differentiating. There are plenty of properties that we walked away from during that period that there will be another property, there will be another opportunity, there will be another way to get in, but it has to be good quality.
Yeah. I always say to people, there will always be more properties.
Yeah.
I know it's sometimes hard to believe,
always
but
is.
there always will be more properties, right?
Yeah. Yeah, and stretching yourself is a hard thing to do.
Yep.
And it feels really, really uncomfortable, and particularly now that interest rates are rising.
Well, they did blame Philip Lowe, who in the last year, because it was after he said what he said about rates not going up, right? So that actually was one of the reasons why they bought. So it's just
they're always going to go up, though.
I know
they were always going to go up at some point in time. So if it's uncomfortable, your options are to earn more, or
buy
whether
less.
that's or buy less. Yeah.
We're nearly out of time, but Jason just asked this question. Jason, thanks once again for the super chat. So appreciated. What is my and Megan's view on vacancy tax for this is the properties that never enter the market? I've had a view for some time that there should be some penalty for holding property deliberately vacant. Now, there are exceptions, maybe holiday homes or whatever, but if you're just literally sitting on property, just sitting there riding the value up, I think that's a problem, because by definition, you're using infrastructure. So that's my. I don't know what you think, but that's what I think.
Look, I think that there has to be differences between people's place of residence that they live in full time, anything that they use for any other purpose. So whether that's an investment property or a holiday home, or they keep it vacant, I think there has to be a difference between what is generated in terms of revenue from a state government or a federal government perspective. Either way, it doesn't matter. But I think the big picture here is what we're talking about, and that is, if there is a vacant property, there is too much of a rental crisis at the moment, and too much of a lack of supply for us to ignore that there should be a discussion around how do we encourage those people to actually bring those into the long-term rental pool. Because if they're not brought into the long-term rental pool, then they're a drain. Is that through a tax? Perhaps it is. But then we have to look at the unintended consequences and what might happen as a result, and what would that mean in terms of how those people behave and what they do with those properties. So I don't think that can just be discussed in isolation, as we have talked about earlier. It has to be a big picture discussion. That has to be one of the pieces of the puzzle that is examined, pulled apart, and put back together in a logical way.
I agree. And, like all of the things, you can't just solve a little bit of the puzzle. You've got to solve the complete puzzle, which is the thing I keep going on about. I've been talking about this for at least 20 years. There's a big picture puzzle here that nobody wants to actually own, right? I'm a great believer in...
You know what? It's bloody hard, but it doesn't mean you don't do it.
Exactly. And it's because, of course, there are lots of vested interests, particularly from high-rise developers and from councils who actually want to take the fees for built, I mean, there are so many moving parts to this. And then you've got the Reserve Bank saying interest rates nothing to do with us, and, house prices nothing to do with us. It's just a matter of we do what we do. It's quite an interesting, complex thing. But my belief is you've got to actually look at it, in that complex way,
in
to
a holistic
understand
way.
it. Yeah,
couldn't agree more.
We are, believe it or not, at the end of the show. I can't believe it. We've only just touched the surface on so many things that we could talk about. But I just want to say thank you so much.
Always a festival of interesting things, isn't it?
Well, it is.
We get to have a chat about Brisbane.
That's why I love talking about property and particularly Brisbane and all those things. One question before you finish that. Somebody asked me right at the front, Brisbane's economy, what's it based on? What is it based on? What is the main activity in Brisbane? I mean, is it, building? No.
Used to be mining.
Yeah, used to be.
So,
I know it used to be, but what now?
Yeah, go back. It's fairly diverse, actually. So there's tourism, there is mining, there is education. So we've got there's medical research.
Yep.
We've got some of the best medical research institutes and centres globally, actually, some really strong medical research centres. Property obviously is a big part of it. It's a very diverse economic base. A lot of technology. So we've got technology hubs in various locations, both in Fortitude Valley sort of side of things, and then down 8 Mile Plain. So there's a lot of technology and investor activity around technology, so incubators and investors, angel investors and so forth. So really quite a diverse base of industry, which makes it quite attractive. What we haven't had for a long time, and we're starting to see a little bit of a shift in this. We haven't had a huge amount of corporate headquarters, so either national or internationally based corporate headquarters in Brisbane, and that's been one of the things that I've spoken about for many, many years. It's held high-end prices back in Brisbane, is that we don't have a lot of those sort of C-level, CEO, CFO kind of positions here, because there aren't large corporate headquarters here. With COVID, we actually started to see some of those people move here, but still have their jobs located interstate or even overseas, and so somewhat work from home and just travel a little bit. So I think the thing that Brisbane has missed and is still missing is large corporate headquarters, and I think that that was certainly one of Peter Beattie's big pushes when he was Premier, was to get, the smart state. Remember that, smart state? So he was trying to attract large corporates to Brisbane and really put a lot of emphasis around that. Virgin came, a few other bits and pieces. We've got some big technology companies here, but we've still got a lot of work to do to get some of those big corporate headquarters here.
Absolutely. Well, maybe the Olympics will also help down the track. Now, we did a poll, and I asked the question, how high will the cash rate go in Australia? And I said 2.6%, 3%, 3.5%, or more than 3.5%. And 60% of the people said more than 3.5%. 24% said 3.5%. 10% said 3% and 6% said 2.6%. So we have a lot of people on the channel who think rates are going to go a lot higher than they currently are.
Yeah, well, could not. Let's see. Because I know I could read back over economic forecasts for decades, and some people will have got it right and some people will have got it wrong, but no one has always got it right.
Spot on. That's the point. Nobody knows. Meighan, thank you very much. Now, if people want to know more about you, where do they go?
Head to propertypursuit.com.au is our buyers agency side of things, or homebuyeracademy.com.au for first home buyers and people interested in learning a lot more about how to buy property well.
Terrific. Well, thank you very much for your time. Always appreciated.
Thanks for having me again.
We'll do it again down the track, I'm sure. And I'll be interested to see where property has gone next time we speak. Take care.
There'll be more to talk about.
See ya. Take care. Bye-bye. There we are, folks. Hope you enjoyed that. I had a ball tonight. I always like talking about Brisbane property. Just to say that next week, it's going to be Tenant Lecantro. He's coming on to talk about the market and what's going on. I've called it Get Real Market Update. So that should be fun. So mark your diaries for next week. Anyhow, there we go. I think that's going to be pretty much it. The dogs are still sound asleep. They've been snoring away, but hardly doing anything else. So that's pretty much the whole of their evening. And I want to say thank you for spending some time with us this evening. Thank you for all the super chats. Really appreciate it. And I'll look forward to seeing you on the show live next week, or follow some of our other shows. Meantime, this is Martin North from Digital Finance Analytics signing off. Cheerio.